Blackstone, one of the biggest names reporting quarterly results this morning. I want to tell you what's going on. The investment firm posting distributable earnings per share above expectations, helped by a jump in the value of the firm's private equity portfolio. It was a record distributable earnings, record fee earnings, $32 billion of inflows just in this past quarter. And joining us right now to talk exclusively about the company's numbers, current and future investments, and what we're all seeing in this market right now is John Gray, President and Chief Operating Officer of the Blackstone Group. Good morning to you, John. I do want to talk about the markets in a moment because, as you know, we've been all fascinated by the phenomenon of GameStop and SPACs and what's happening, which really does relate to the private market as well, given the valuations and the like. But let's talk about this past quarter at your firm and what it says about where we are in this economy right now.
Good morning, Andrew. It is great to be here again. Yes, it's a challenging economic climate, but we had the best quarter in our firm's 35-year history. As you noted, we had record distributable earnings, record fee-related earnings, up 36%. We had record appreciation across our portfolio, which is what really matters for our clients. We had $30+ billion of inflows, nearly $100 billion for the year. It was a great quarter on every metric for us. Why it happened, one was obviously the strength of markets in the fourth quarter. Secondly, I would say it's where we've positioned our portfolio the last few years. Big exposures in logistics, in things like life sciences, digital payments, enterprise software. And then finally for us, what I'd say is we're seeing incredible growth in what we call perpetual capital, things like core plus real estate, direct lending, infrastructure, insurance. This provides a tremendous base for us in growth for the future. So a really good quarter and what turned out to be a better year at the end than anyone expected.
John, you and your firm and your peers are considered the smart money in this market. And so one of the questions I would ask you is right now, do you consider yourself a net buyer or a net seller, given the prices we're seeing in the public markets and how you're thinking about these private investments?
Well, it's interesting. The fourth quarter says a lot. We were the most active in both selling and buying in our firm's history. And I think it speaks to the breadth of our platform. So there are parts of the market that don't look great. I think long duration fixed income is not a great investment these days. Obviously, there are parts of the public market, places like renewables, some of the tech companies that are trading on sales as opposed to earnings. So there is some excess in the market, obviously. But then there are other places where we like opportunities. We like private credit. We like some of the COVID impacted businesses where we think there'll be a big recovery. Things like travel, entertainment, transportation infrastructure. And then there are some of these big trends that are happening as we move online. Shopping's moving online, gambling's moving online, dating's moving online, payments, software. And there are businesses there, not just the applications themselves, but logistical supply support to that, compliance support. We're looking at that whole ecosystem. And then I would say geographically, I think Asia is pretty interesting. They're coming out of the pandemic in a stronger place than the US and Europe. And we're spending a lot of time there in both real estate and private equity. So there's always opportunity somewhere. But yes, there are some places where prices have moved up quite a bit.
Shepard Smith here. Thanks for watching CNBC on YouTube.